Hey guys, Mike here. So boy, I tell you what, it was a relentless day of selling in the market today. Just pushing these markets down. I'm going to show you stocks like Tesla and some others that, like Tesla, for example, it just broke a very key level and in after hours is getting pushed down even more. But there's others that are just sitting there and just breaking these levels and getting pushed down hard. And so we're going to go into that right there. But, I'm going to start you off one. I'll show you what I was talking about in a way when it comes to housing, right? We're going to go into some data that came out today on that, and you kind of see this big picture of like where we're at and why this is happening still. And also, you always wonder sometimes, like, where is this money coming from to push markets up to get in these hyperbolic states like it was in June and July, and just kept going higher. And you're like, what in the world? I'm going to show you exactly where the money came from, okay? And then I also tell you, the other day I talked about when we bail these companies out, right? Every time some company gets trouble, we take our tax dollars and we bail them out. And not really so much, but the government steps in, right, and bails them out. So, I'm going to sit there and show you what absolutely aggravates the daylights out of me. And I had told you in that video, I said, hey, we should get stock. Well, one of you in the comments, this is why it's good to read the comments, said, hey, remember we got stock in this company. I was like, oh. So I went and looked and I'm like, they're right. And I started looking for others and I'm like, there's more than one precedent where we've actually done this before. And I'll also show you how terrible the government is at negotiating these deals. But speaking of housing, look, this is what I was talking about yesterday. This right here is the difference in housing completions total versus new private housing under construction. This is where we used to be. This is the range we used to be. This is the spreads between those two, right? And then this is where we went going into 2005 to 2020-ish. And then look where we're at now in the negatives, right? But now we're down here. So, and you see these spreads will go on for years, right? Difference between how much we're doing in housing completions versus how much we're doing actually in private housing under construction, okay? And so that's why, if you want to know why is there this shortage and everything, and on top of it, you have to combine that with the fact we're not selling, right? And so, because this is just the new stuff, right? And so imagine the old existing stuff on top of this not being sold. We're not leaving, right? And so that's a problem. And of course, to make sure we're going to become a renter's nation, and these are going up fast now because people are buying houses, these ought to be getting filled fast, is the total of multifamily units under construction we hadn't seen since 1972. Okay, and it just exploded after 2020. I know I'm seeing a lot of these go up in my area, so let me know if you're seeing the same and stuff. But people got to live somewhere, so I guess that's where they're going. And in a lot of areas, it's cheaper to rent. Now, what's been pushing this market up over and over? Well, some of it came from foreign investors. They piled $106 billion into stocks in June. And the stock market went up even more in July. So what do you think they actually did in July? All right, so they poured in. What's funny, at the same time, though, what did we do? Well, you can see we bailed out fast. Net U.S. purchases of foreign long-term securities. Look at it's the exact opposite. Look at that line down, straight down. You're like, nope, we're out. And so if we bailed out of foreign securities, where do you think the money went? Well, of course, it went into our stock market. And this is what I keep talking about when I showed you guys the one that was Saudi Arabia or whatever. But you've seen these other economies and their markets like the Chinese market, thing like that. They're a dumpster fire and way more risky. So what are people doing? They're like, hey, it's the only game in town is the American stock market, that or treasuries, really, right? Or money markets, everywhere you want to go. But, and so when that happens, people are going to pile in. That's why those big 7 stocks, the Magnificent 7, got so freaking big and so overstretched because it wasn't just us. It was foreign money rolling in here too by the billions piling in, trying to make some money somewhere. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And of course, it's like the margin debt I showed you, right? It's like now you look back and go, that makes sense, right? We're taking out margin like crazy, billions and billions of margin being put in that market, which means that's why you saw meme stocks come back, high beta stock, their stocks just going through the roof for crying out loud. And then of course, billions rolling in from overseas because their stock markets are terrible. And so, again, people like to make money. They're going to put the money somewhere, and there's always, a bull market somewhere, they like to say, or at least a rallying market. Let's just put it that way, okay? Now, again, the other day I told you guys, I said, hey, when we start bailing these companies, we need to get something out of it, right? Because it's not fair for them just to run the company to the ground, then we come to the rescue and go, we got you, no problem. And again, this is to save jobs, right? And so, and then one of you guys, I just forgot this, it's been so long, but one of you guys, oh, well, guess what? Well, we took shares in GM when we took it over, and I was like, oh man, I totally forgot about that. And we did it in another company too. And you can see right here, government sells the last of its GM stake, right? And you come down, and by the way, these people are so bad at this, we actually lost $10 billion in this deal. But when you look, the U.S. government ended up losing $10.5 billion on the General Motors bailout, but it says the alternative would have been far worse. Of course, it'd been jobs. That's why we bailed them out. And so they recovered $39 billion of the $49.5 billion. And when we look right here, they actually ended up taking 912 million GM shares, or 61% stake in the company. All right, and shockingly, we gave the company back. So it actually tended to work out. It's just a deal they made. It must have been absolutely horrific, by the way, to end up losing $10 billion. That was nice of them. The other one we did was AIG, $85 billion bailout. And the reason why we bailed them out, I'll show you why in just a minute, but it was because of Lehman Brothers, because they went bankrupt like the week we did this, and Lehman was begging for a bailout. And I'll show you what they're also trying to do behind closed doors. But you see right here, we sold $6 billion in AIG stock. So we had a boatload of AIG stock. And so, again, we've taken stock before. So I don't know why we ain't doing it anymore, because I hadn't heard any deals like this when we got in 2020 or anywhere else. But I'm a big proponent of it now because it seemed to work in the past. We just got to obviously do better deals, for crying out loud, for sure. And this is the other thing. I remember this when he got in front of Congress when this happened. Lehman Brothers was begging for a bailout, right? And mind you, they gave their CEO almost $500 million in 8 years, right? Which we know now, looking back, because of court documents and everything else, they were just running a scam on the last 4, right? That's why we got in this big mess with mortgages and stuff like that. But look at what this guy they were trying to do as they were begging for a bailout here.
Remarkable document is a request submitted to the Compensation Committee of the board on September 11th, 4 days before Lehman filed for bankruptcy. It recommends that the board give 3 departing executives over $20 million in, quote, special payments. In other words, even as Mr. Fuld was pleading with Secretary Paulson for a federal rescue, Lehman continued to squander millions on executive compensation.
And of course, they're not the only ones. When we bailed out the banks, what'd they do? They're so bad in Washington, they don't even put stuff in writing, right? And remember the famous line, I forget who the guy was in charge, Greenspan maybe, says, well, they're going to do the right thing, right? Just think they're going to do the right thing. No, the whole point of bailing the banks out was so they would keep people in their homes. Instead, what they decided to do is just keep foreclosing on people, take the money, buy back stock, give bonuses to their executives and stuff, and all kinds of stuff. So, that's how bad the government is at that kind of when we're bailing people out. But, as far as I'm concerned, forget that. Forget the gravy train. Like, somebody said in the comments, it's amazing to me how these big companies, the executives will just rape them for, money for years and years, just running the company in the ground, then get some golden parachute, and then come over here to us and say, can y'all bail us out? We employ a lot of people. And then we come in and bail them out and either end up losing money or that, we may get the money back if we're lucky. So, yeah, we need to do a much better job, or just let it be a free market and let some of these freaking companies fail, which sucks. But, when it used to be a free market, that's what took place. But now it's like, can't have that happen. We can let, I showed you the bankruptcies, right? And all those companies, smaller companies, they're letting just go bankrupt one after the other. They ain't bailing, family-owned businesses out, right? They're not bailing, smaller companies out. But these big conglomerates is why I always rail against letting companies get too big, i.e., JP Morgan, that's another one, right? And they're fixing to get bigger. I don't know if you heard the news on that. That you got Goldman Sachs, all these big banks. They're sitting there on piles of cash, by the way, and already put a statement out saying they're just waiting to buy all these commercial properties that are distressed for pennies on the dollar is what they're going to do. So they'll make that portfolio bigger, buy pennies on the dollar, and just get even bigger, right? So that's fixing to happen. Because remember, never too big to fail. Wink, wink, right? Because that worked so well in the past. So yes, my blood does get to boil when I see family-owned businesses, smaller businesses just be allowed to just go bankrupt one after the other as they keep raising these rates. But if one of these big companies gets in there, I gotta go get them. Like, no, you just don't allow them to get so freaking big. But of course, they own the Congress legally, so they get to do what they want to do. Now, speaking of the market, obviously relentless selling today, all right? And you can just see, again, I'm going to go through this one quick. IWM, hot mess, all right? Broke that 186 level we talked about. it's just a waterfall, right? And that's what we talked about. As soon as 8 and 21 cross, and the 50 broke, all that stuff, massive pressure. And again, economically, this is the worst time for small caps right now, with the rates being where they're at and all that stuff. It's just a hot mess. Now it's in this volume gap. So can it drop farther? Yeah. Would it be, but it is getting almost really oversold here. It's approaching its 200 and the 100, which are right there together. So if you're going to get a bounce, this is about the time you want to see a bounce. Again, with OPEX, monthly OPEX that is, being tomorrow, you just never know what's going to happen, because there will be trillions of dollars in options expiring tomorrow. So we'll see what shenanigans the market makers want to play. But this does got room to fall if it wants to continue to fall. Now the Qs, here it is, finally broke that trend line right there today. So now we're below the 50, we're below that trend line. We're down only 7.5%, which it feels like a lot more probably than a lot of people. And when we zoom out, you can see we're only 5% away from the all-time high. So the auction is thin up here, and that means so is the support. So when this thing starts to fall, obviously there is more room to fall if market maker wants to push it down. And go down to that 100, it's only about 4 more percent down to the 100 moving average, and another decent support level. So just keep that in mind. Now Apple, why is the market falling? Here we go. We talked about this one many times. When Apple and Microsoft, two stocks, make up almost 13% of an index, then guess what? When the generals start to get shot, they start to fall. And Apple broke the 50, broke the 100, and now it's set here and it's been filling in some gaps. So again, it's sitting on a volume node. Maybe it gets a bounce because it is oversold like a lot of these stocks are. But it's been pretty relentless on Apple right now because it deserved to fall because of that crazy run up it made. And it's only down 11.5%, which again may feel like more, but that's where that one's at. And then you look at Microsoft, same thing, right? It's broke its 50, it's broke its 100. It hadn't quite filled this gap right here, but it looks like that might get a fill here. So again, you make up 13% of an index. Don't take much to start pushing these down. This one's down about 13% if I'm not mistaken. And we scroll out because it was at all-time highs, right? So again, the air is thin up here, which means the support is thin up here. And so that's why you can get these double-digit drops, and it don't take a whole lot of time to do it. But again, it's a well-deserved drop, okay? And again, it's only down, 13%. And then when you go to Tesla, which was sitting on the 100, I think it broke it in after hours. But again, I told you right there, I said when it broke that main key level the other day, watch out below. Now it's broke 220. And you break 220, all of a sudden you see 210 in the area. You break 210, you can see 185 to 195. Just putting that out there to you. Keep that in mind. Again, let's see if we can get down this trend line, fill this final gap right here. There is support there, which would be around the 210, 212 area, it looks like. And so we'll have to wait and see. And again, here's Meta, broke its 50, another one, got sitting there in a gap. And this right here could fall a long way because of the crazy meteoric rise it took. So it's in a big volume gap. So if they want to push this one down, it is a prime candidate for it, and well deserved, by the way, if that happens. So we'll see. Again, you get monthly OPEX tomorrow. Market makers love to push down stocks that have these meteoric rises and stuff. And so again, look at AMD. It was a hot mess today as well. I mean, it started to break down out of this wedge right here, broke its hundreds. Now it's broke the 50s, broke the 100, broke the long-term trend line, broke the 110 area. And so again, I talked about weeks ago, you could see 102, anywhere from 98 to 102 in play if this weakness continues. You keep thinking, I know I sure do, I don't know about you, that with all these different stocks being oversold, eventually you're going to get a relief rally, but that just has not happened right now. And so again, as this AI bubble continues to kind of have the air light out of it, and you've seen any AI stock that basically is not NVIDIA just absolutely getting pummeled right now, right? And so as they went through earnings, and none of them said, we're going to make millions and millions next quarter, the quarter after that. So people are like, wait a minute. And that's what I mean by an AI pump, an AI bubble. There'll be a few stocks, but a lot of them, it ain't going to happen for a long time, brother. Telling you right now, mark my words. And then you look at BABA. This one actually did have a pump today because guess what? China come out and said, stop selling Chinese stocks to the Chinese banks and companies, right? And it must be nice to be able to do that. So it got a pop. It was like 3% down, started selling off in the market the rest of the day. But it got a reprieve because they said that. And another thing to watch out for is who bought the stock. In the second quarter, David Tepper of Appaloosa, who's a multi-billionaire, worth about $18 billion, but he made his money as being a heck of a successful hedge fund manager, right? I mean, this guy averaged like 25% a year. But right there, it was basically, I think it was his biggest purchase, right? So, he ends up buying 4.47 million shares, so 7% of his portfolio. By the way, he also likes a lot of semiconductors, NVIDIA, AMD, Qualcomm as well. He tends to be somewhat active, but if you look at this right here, obviously that's not a bad thing if he's seeing something, and he may not still be holding this now. He got in at 93, maybe he sold it when it ran up to 100. We'll have to see, but it's not a bad thing when you see a guy like that invest in a stock, and he tends to take big swings is what he tends to take. That's how he made his billion. So just keep that in mind. He was buying the banks after the 08 crash before a lot of people were, and so he tends to take on risk and stuff and take risky bets. Now PayPal, you can see right there, I mean, this thing right here, woo, I mean, it's close, right? It's getting to that level. I mean, only like 0.01% away from that level right there, and that's important because going back to 2017 again, if that area breaks, you can see a nice fall down to like 54. If that area breaks, which of course that's another 6% down or something. But also another way to look at this, it's in a falling wedge, right? And so it comes down here. Usually I think 56, 70 is really your last hope if it gets down there. If it breaks that, obviously I think, hitting 54 for sure. If it breaks that, it goes down around 48, I believe, is the next level. And I mean, this is what I was talking about. I say, you don't have to catch the falling knife if you don't like to. Some people do, and that's no problem. I would say do what you do, man, especially if you have success at it and stuff. So it depends on your risk profile. But you got like stocks like Disney, like people were piling in, it's going to the moon, and you're like, well, gave back all those gains now. Because Disney and some of these companies, they really do have a lot of internal issues. Like I told you, a lot of these big moves up, it's not fundamentals or anything. And all of a sudden, like I said months ago, when earnings, all of a sudden the market wants to go, well, I think earnings might matter. What's going on here? It's amazing how they do that, right? But it's just part of the game. And if you hadn't noticed, again, pay attention. Game within the game, behind the curtain. Again, these rocket ship up in June and July, and all of a sudden now the mass media is acting like all this bad news. It just started, didn't it? And I mean, doing a news brief every single morning for members and stuff. I get to see it, and it was so positive coming up through June and July. August 1 hits, and here you go with the downgrade. Here comes Fitch. Here comes Moody's. Here comes all this news out of China. They're having a problem with their real estate market. I did a video on that a year ago. Are you kidding me? All of this has been going on. It's just, don't get it twisted. Yes, especially those financial channels are all in cahoots with those big hedge funds, right? And so we hit this moment of weakness, and now here comes mass media piling on. Here comes the rating agencies piling on, really pushing it down. Because always remember, retail, when we're coming down, right, we're the last ones to sell out normally, and that's what usually hits the bottom. So we are the entry liquidity for the big hedge funds, right, and all that stuff, and the big players, right? And then when it's running up and everybody's getting FOMO, we are the exit liquidity for them as well. Okay, so that's just how that works. And make sure you're watching the dollar, and make sure you're watching the 10-year yield. Just FYI, I just did a video on that with the members, so make sure you're watching it, because that's another thing spooking the markets right now as well. So anyway, hope you guys got some out of it. Hit the like and subscribe button if you did, and please tell me what you think monthly OpEx is going to do tomorrow. Are we just going to flatline across to kill all the premiums, or are we finally going to make a move in a different direction, or are they just going to keep selling it off, right? So anyway, have a good one, guys. See you later.